JSW Energy is up nearly 4% as it acquires O2 Power's green energy platform for 12,468 crore rupees. Brokerage too bullish, and with Axis Capital Investec, Motilal Oswal seeing potential upside for the stock.
Vodafone Idea is up over 6.5% after the Department of Telecom waived off bank guarantees worth 24,800 crore rupees. The company says the latest relief will boost 4G and 5G investments in the country.
Cigniti is down nearly 7% after Coforge board approves amalgamation with Cigniti Technologies. Shareholders of Cigniti Tech will receive 1 Coforge share for every 5 shares that they are holding.
Cenoris Pharma sees a strong debut on the bourses. It is listed at 600 rupees a share compared to its issue price of 391. Ventive Hospitality also lists at a premium compared to its issue price of 643. On the other hand, Carraro India is listed at an 8% discount to its issue price. The management joins in just a short while from now.
IOL Chemicals climbs more than 3% after the company's board approves a split in the 1:5 ratio.
You're watching Chartbusters here on CNBC-TV18. I am Hormuz Patakia. With me is Vinny Motiwala. And on expected lines, it is absolutely quiet in the broader markets, counting down to the end of the year. But of course, there is a lot of primary market action that we have.
Absolutely, a lot of primary market action that we're watching out for, Hormuz, today. So yes, we do have the management of Carraro India who will be joining in with us. They listed today on the exchanges. It's a component manufacturing company and bit of a discount that it listed at 651 rupees per share versus the issue price of 704 rupees per share. We have with us Tommaso Carraro, who is the vice chair at the company, as well as Balaji Gopalan, who is the managing director of the company, joining in with us on their listing day to talk about the strategies of the company. Very good morning, gentlemen. Thank you so much for joining in with us on the show today. You know, finally you've listed, so we can start talking about numbers as well. Now, when you look at it for auto sector overall, the H1 has been quite subdued. So I just want to understand in terms of the trends that you are seeing shaping up in H2, how is the company expected to perform in the second half of the year?
Yeah, thank you very much for taking us on your channel. It's a great day for Carraro Group in their history. It's a big milestone, and it is a significant step in Carraro India as well. The markets are totally dependent on various factors, but what is more encouraging and gives us the confidence is the fact that Carraro India is present in the sweet spot of agriculture and construction equipment, and these are the pillars of any economy. So it's only a matter of time. We are not too worried about what is happening today in the stock market. We have our conviction, we have our plans. The market is ready to absorb the technology that we are providing to the Indian customers. So the future looks good. This year has been a year of election, so there has been some slowdown in the construction side because tenders don't get released during those periods. But the monsoon has been very good, so we feel that things are going to improve and the future is bright, not just for the Indian agriculture and construction equipment industry, but overall the Indian economy. We feel we are at the right place at the right time.
I think you're right, Balaji. We have been listed for maybe 40 minutes and we have a very long-term plan. We have been in India since 27 years ago. It was a long process. Today we went public, and this is a milestone for our company. It's a starting point for new opportunities that this gigantic market will give to us.
Gentlemen, good morning. Thank you for joining in and congratulations on the big day today. You know, you mentioned, Balaji, that you are at the right place at the right time. The monsoons have been good. But how has the second half panned out for the company as a whole? How have demand trends shaped up in this Rabi sowing season as well as the gone Kharif season as well? What do you see in terms of growth for the second half and the full year as well? If you could share some numbers with us.
We are not looking at a very big recovery in the second half. The first half has been reasonably good. We are also in a way getting impacted by the markets in US and in Europe, which have not been very I would say exciting in the last 6 months. But in any case, the Indian market kind of compensated for some of the slowdown that we had in our exports. And I am looking at closing the year more or less as per the budget that we have planned at the beginning of the year. There is an uptick that is happening in the last 4 weeks, and we hope it will continue and it will become something that we are able to accomplish and achieve by March 31st. So to answer your question, we would more or less remain where we have pegged ourselves. Close number should be between 195 million euro to 200 million euro this year.
Okay, sure. I just want to talk also in terms of the margins of the company. Now, obviously, from FY22, from 4.1%, the margins have moved to 7.4% in FY24. What is the upside that is there still in terms of margins? What are the factors that could be possible that will be driving the margins? Or are these 7% range margins that is only going to be sustainable? Or will there be an improvement is my point.
Yeah, it's a very valid question, and this is something we want all the investors and stakeholders to understand, that we have started from the earlier numbers which were very low, and those are not the benchmarkable numbers, because at that point in time we had a royalty which was being paid to our group headquarters. Subsequently, 153 IPs have been transferred to Kararo India, and I am very proud to share with all the investors that starting since last 4 to 6 months, the royalty has been made zero. I repeat, it has been made zero. Earlier, it used to be in the range of 2.2 to 2.6%. That has been completely eliminated because of the transfer of IPs into India. This is number one. We still continue with a small decimal level royalty being paid for the brand, which was existing in the past and will continue now, so it won't affect my EBITDA. This is at around 0.3 to 0.4% of the brand royalty that we pay because we are using the Kararo brand. Other than this, it has been very, very scientific and structured approach that we took to benchmark with the industry at large. And today I am very happy to share that the audited result of September closing has given us an EBITDA of close to 11%. So we have already reached a solid double-digit EBITDA. And we are, I would say, the journey has just been completed half. We have accomplished half of the EBITDA that we are planning for future. And these come in a big way because of localization of our components. From an earlier 67%, we have already reached 74%. And this is adding to the 11% EBITDA that we are talking now. And the work is still going on, and we hope to receive a good response from the localization and other initiatives on efficiencies that we are taking, and we will be comparable with our peers, we will be comparable with the market, and I can reassure all the investors that the trend of EBITDA is growing. So don't look at single digit numbers. We have already consolidated ourselves with 10.9, 11%, which is the audited September results.
And there is another very important factor that we should...
Right. Gentlemen, due to paucity of time, I need to ask you two very quick questions. First being the fact that since you mentioned royalty is now only a small decimal, so does this remain as is? Is there no scope to have a potential increase in the near future? And two, what are your expansion plans going forward? Are there any plans to establish any more manufacturing facilities from the current that you have?
Very good. The royalty has not been made zero by a decision to reduce the number. It has become a factor because the IP is transferred into Kararo India. So if Kararo Italy buys the product from India, they have to pay me royalty because the IP is now with Kararo India. So there is no question of reimposing royalty because the IP rights have been transferred to Kararo India already. This is the first question. Second question, can you please repeat?
What I meant to ask, are there any expansion plans going forward as well?
Expansion. Yes, currently we are at around 80 to 85% of our capacity utilization, and in the sector that we are present off highway, usually this is the ideal capacity utilization, providing for any spikes that happen during the year to cater to the customer's requirement. We are now looking at big numbers, and very soon we have around 30 acres of land already available with us in Pune, and we are in the process of working out something to utilize that land better. So I wouldn't be able to give numbers as of now, but yes, there is a significant plan of expansion.
Okay, significant plan of expansion. Thank you so much, gentlemen, for joining in with us this morning on the show, and hope to see you all more often now that you're a listed company. Thank you so much for that. On that note, we'll slip into a very short break, but don't go anywhere because we have a lot to discuss in the world of pharma, and we'll be joined by Sumit Gupta from Centrum Broking after the break.
Welcome back. Now, the start of 2024 was bitter for players in the contract manufacturing space. However, a few positive triggers emerged on the horizon in the later months. But will 2025 be a better year for the CDMO pharma companies? Vinny tells us more on that.
2024 began with a bitter pill for contract development and manufacturing organizations, or CDMO players. A muted biotech funding environment dampened the pace of early-stage projects, leaving these biotech firms feeling the heat in 2024. But here's the good news. Positive triggers are emerging on the horizon, and there are clear green shoots that are visible and indicating a turnaround for the sector. The first one is an uptick in biotech funding, signaling a recovery expected in CDMO players. Demand for CDMO services in late stage as well as commercial molecules is also on the rise. Moving on to the third one, we have broad-based commercial contracts in biologics and small molecules that is picking up pace, as well as biologic CDMO demand that has remained robust, and we are expecting the good growth to continue going forward. Nutraceutical manufacturing demand, that is also recovering quite steadily, and now we will shift focus and talk about what the highlight and commentary is coming in from the CDMO players. That's a key one, because what they're signaling is that maybe in the near term, there could be some mixed near-term challenges that we're watching out for, but a promising outlook that is coming in for the medium term. Piramal Pharma is expecting to see early teens growth as the CDMO segment is outpacing the company's average growth. DB's Lab, they remain quite confident in terms of a double-digit growth in terms of revenue. We have Syngene, Laurus, as well as Newland Labs. Now, their commentary is quite similar, because what Syngene is saying that they're expecting high single-digit growth in FY25, but FY26 expected to be stronger. Similarly, for Laurus Labs, expecting a soft growth in FY25, but a good growth from FY26 and onwards. And Newland Labs, also flat growth in FY25, but targeting a 20% CAGR growth in the medium term. Now let's look ahead. The industry is poised for an acceleration in terms of top-line growth. Currently somewhere at 9%. By FY27, 16% growth is what one is watching out for. However, valuations, that's the key concern coming in here, because valuations currently are ranging somewhere between 47 times to 60 times for these players. Following the surge that we've seen coming in on a YTD basis in terms of a stock performance, that was somewhere between 40% to 80% in the run-up that we're seeing, which is outpacing the Nifty Pharma's 34% rise that we saw this year, approximately on that front. Now, finally, here's what investors and analysts need to keep an eye out on. One is the progress in terms of the Biosecure Act, when it's going to be picked up in the US Senate. Moving on to the next one, we have seen sustained recovery in biotech funding. Will that continue in 2025? That's going to be a key factor. Uptick in RFQ surely is there, but are they translating into confirmed orders? Keep an eye on that, as well as company-specific new launches. What is the trajectory that they have for price erosion in generic APIs is something that is very important for CDMO players. The CDMO sector is navigating a complex landscape of challenges and opportunities that they're seeing. While there are signs of recovery that is quite evident, sustained momentum will be a hinge on factors like funding. legislative support, as well as execution capabilities of these key players. However, could these stretched valuations limit the sector's ability to deliver significant gains in 2025? Let's watch out for that.
We'll pose that question to Sumit Gupta of Centrum Broking, who is joining in now. Sumit, good morning. Thank you for joining in. You know, there are some green shoots visible, right, on the ground for 2025 for these CDMO players. But how are these initiatives that the government is taking, say the PLI scheme and other such initiatives, how would that support the growth of these companies going into the new year?
Hi, thanks for having me. So yes, if you see for all these CDMO players or let's say of the API companies, the government is doing various initiatives such as bulk drug parks or PLI scheme, as we all know. And there are bulk drug parks for, let's say, key starting materials or APIs. So, or let's say drug intermediates. And secondary on the medical devices sector, which the government is focusing on. So if you see from this point of view, what Indian government is doing, it is providing a platform for all these companies to do R&D to do the technical know-how. Technical know-why instead of the technical know-how. So as of now, currently, what we have is we have a good technical knowledge of the know-how, but we don't have technical knowledge of know-why. So that's why government is focusing on that. And subsequently, it aims to outsource all these technical of manufacturing to some other countries. Secondly, on the medical device sector, government is doing on the same aspect that it plans to make India as a key, basically manufacturing hub for medical device sector. Secondly, if you see from CDMO point of view, all the players are de-risking from China. So let's say if from the US Biosecure Act point of view, it can act as a trigger. However, the companies are focusing on de-risking their from China when coming to the Indian and some other countries. So it's a medium to long-term opportunity which is there.
Sure. Sumit, good morning. Vinny this side as well. So yes, medium to long-term opportunity surely playing out for a lot of parts in the pharma sector. You know, in 2025, what I want to look at is that where the CDMO players, GLP-1 opportunity we have, you were talking about medical device side that the government is working on, or hospitals, diagnostics, which is it that, you know, would see the most in terms of an opportunity or something that we are expecting in terms of a good move coming in 2025? Which part of this in the pharma or the hospital sector that we would see a growth?
So if you see GLP-1 in itself is a big opportunity, it's a multi-billion-dollar opportunity. And even if I look from short-term point of view, so liraglutide, it's a $1 billion opportunity. It has gone generic in the US, Europe, and India, and in some other markets. But overall, if you see, the competition surprisingly has been limited so far. So if you see companies like Cipla, Reddy's, or Sun, which are under coverage, they can see a good opportunity for this particular molecule, liraglutide, which I'm talking about. In the near term, 25-26, we can see companies focusing on this. Apart from that, I see a good opportunity for hospital sector as a whole. So there's a lot of CapEx which is going on. I understand the concern that valuations are factoring in majority of the positives. However, hospital sector, considering the kind of volumes and the insurance penetration, that is playing out quite well.
What among this entire broad pharma basket is featuring in your top picks, Sumit, for 2025? Is it among the Sun Pharmas or the Ciplas or the Lupins, or is it among these contract manufacturers like Laurus, or is it some of the hospital names?
So as of now, so within pharma we have Sun Pharma and JB Chemicals as a top pick, and within hospitals we have Artemis and then followed by Medanta.
There is a lot of consolidation that has happened in the hospital space, right, Sumit? Do you expect this trend to continue into 2025 as well?
Yes, not only 2025, over the next 3 to 4 years also, I expect majority of the consolidation going on in the hospital space. So big hospital, let's say a big hospital of market cap, or let's say bed capacity of around 7,000-8,000 or 5,000-6,000, they would be acquiring beds of around hospital with beds of around 1,000 to 2,000. So depending on opportunity, be it in terms of scale or geographic penetration, so we will continue to see more consolidation happening in the hospital sector.
Okay, expect more consolidation to take place in the hospital sector. But Sumit, thank you so much for giving us your time this morning and talking to us about the pharma, hospital sector and everything in between in the world of pharma. But on that note, we are absolutely out of time on this edition of Chartbusters on CNBC-TV18. Thank you so much for tuning in. Up next, we'll have more on the market, so don't go anywhere.
Welcome back. Well, Winnie was in a bit of a rush before we went into the last break, but then she realized today is the 30th and not the 31st of December. But the markets too have slipped into the green now, recovering from the lows of the day, but action remains completely quiet. The mid-cap index too trading within around 0.3%. The Nifty Bank is up 200 points. And with that, it's an official wrap on Chartbusters from Winnie, me and the team that put this show together. Thank you for watching. Trading Hour comes up next.